Okay, in this video, we're going to go over how we're making progress on the phase 2 of the 100k account. We're going to go over a couple of losses that we're taking, and we're going to go over a 3.5% win, and we're going to break it down on the charts. And I'm going to show you guys everything that I learned and tell you all the lessons I learned this week and how we're going to improve our trading. Stay tuned because there's some very important lessons I'm going to go over in this video. So let's start on the account metrics for the 100k phase 2 with funding traders. So essentially, as you can see here, it's been a bit of a journey so far. Right now, we're back at break even after taking a couple of losses in a row, which we're going to cover and how they can be avoided in the future. And we're going to go over how even in some of these losses, I was right and priced it exactly as expected, except my stop loss literally just got hit by a pip. So this is essentially what the challenge is looking like so far. Right now, we're basically back at break even. We're just down just like 0.1%, which is nothing. The win rate right now is quite low, but the truth is, and this is always how I view it, is one of these should not have been taken, and that was purely my fault. And that one we will discuss in a second. One of these was a winner, and I literally got stopped out by a pip. So talking about stop loss placement, etc., that one can be improved upon the entry. So had we got the right stop loss placement, then that one would have been a winner as well. And then one more of them was another one that I was highly confident in. I was obviously just wrong, but we're going to go over the lessons learned in that as well. So back at break even on the account, let's dive into the trades that were taken. Okay, so first trade here. This is essentially one that we saw at the end of last week, and I'm going to cover what happened, why it was a loss, even though the trade was a winning trade, right? So as you can see here, expecting price to pull back into this fair value gap. And so we were trading that move to the fair value gap. We had a previous day high sweep, then we created a balanced price range after also sweeping this large candle range right here. And so what I was anticipating was price to push up, reject from this balanced price range and head down towards these lows and this fair value gap. Then as you can see here, price rallied up above that level that we were expecting price to hit. And so I was ready to get in short right there. And this is what it looked like on the 15 minutes. Price opened, rallied above Asia into that balanced price range. And as you can see, I was expecting price to basically reject lower from here, clear AMD pattern. So essentially, this is what the trade ended up looking like. We ran up, we displaced lower right here. So I got in my entry right here, and stop loss was just above the high. Price rallied up just one more time, took that high, and then it ran towards the take profit, right? And at this point, I was thinking, right, we can get in another entry here, but I don't take the same trade twice because purely for psychological reasons, it's if you lose twice on the same trade, it's terrible for you. So I basically just placed this on paper trading, and that one ran to take profit. So the exact same idea, although the stop loss was just taken, right? And so that begs the question, is the stop loss in the right place? Should I leave more room for the stop loss? Potentially. This doesn't happen too often, but it's 100% something that needs to be looked into because, yes, sometimes your stop just gets taken, but if you're right about the trade idea, you don't want that to be happening as well. So another thing that I'm looking into in terms of this is that I could have waited a bit longer. To be fair, I probably would have entered somewhere around here anyway, but I could have waited a bit longer. And then when we saw this displacement right here below this market structure, that could have been the entry signal rather than trying to get in here, because I was confident that we would just slam down right here. I didn't think we would chop around. So I got in immediately. But as you can see, price rallied up one more time. And then this was the re-entry opportunity, which I took on paper, ran straight down to take profit where my level was. So that was the trade that should have won, but it lost, obviously. So right about everything except just the entry, unfortunately, which is fine. It gives us some room to basically learn and get rid of errors, right? But at the same time, I love to see that I'm right in my bias and it's only my entry that was wrong, because that means that it's easier, way easier to refine my entries. So next trade, this one was also a loss, unfortunately, but this one was that one that I was really quite confident in at the beginning. So as you can see, price clear AMD pattern, accumulation, manipulation, took some old previous month's high, distribution, and I was expecting a continuation of this distribution lower from this daily fair value gap. Then onto the 4 hours, you can see price ran into that fair value gap, displaced lower right here. And then basically at this point, I thought we were on the right side of the market maker sell curve, right? So I was expecting price to reject from this fair value gap after sweeping some highs. And so essentially I just waited for price to rally up above Asia, tap into that, and then look for a market structure shift and fair value gap, which is exactly what we got right here. Market structure shift, fair value gap. And I was really confident in this. I was really confident in this trade. And one thing to note about this, which I noticed in review, was essentially on the DXY, the dollar had already taken the level that we were expecting it to hit, right? We hit a key level, an order block on a Friday. And so in that scenario, the probabilities are lower that it's going to play out in your favor, because thinking about the TGIF setup, if the level that you are expecting price to hit is hit already on Friday, then the likelihood is higher that it's going to just retrace and not continue to expand. And so obviously trading US dollar CAD, if the DXY is going to retrace, then so is dollar CAD, right? So this one, coupling with the idea of intermarket analysis, like this one could have been avoided, but I also thought it was really good. And I did think that if we were going to retrace back into the range on Friday, I thought that we would take the previous day low before we did that. So I was thinking potentially a run lower here and then retrace back into the range. But unfortunately, this one was just a loss. But that's the lesson I learned, right? Use intermarket analysis carefully. And this is an idea that I've really been thinking about lately, is that it's not about, is this trade going to win or not? It's what's the probability that you're going to be right in this idea, right? Because you're never going to be 100% right. So it's like weighing the probabilities. You weigh all the factors that you're looking at, and then you say, right, what's the likelihood that I am right given the probabilities of this? So say we're respecting a fair value gap, we're sweeping highs, we're displacing lower, except the higher time frame is bullish, right? All of a sudden that short becomes really low probability because you're trying to short in a higher time frame bullish narrative. Whereas if the higher time frame was bearish, then that would be really high probability. So in this case, the higher time frame was kind of undecided, and Friday hit a key level. The likelihood is that we're probably not going to expand any further. And so I took a short in a low probability condition, essentially. Although I was very confident in the trade, the probability was lower. So I'm trying to perfect taking high probability trades. It doesn't mean they're all going to win. It just means that in the conditions I'm trading, it's high probability that it'll play out in my favor, essentially. So we got another trade here. This one was a loser. And to be honest with you, this one was purely my fault. I attribute this to two things why I took this trade. Was one, my mindset was not in the right place this morning. I think I woke up really tired, and my morning routine was interrupted, which is, it happens, right? It's not a problem, but that definitely set me out of motion for the day. And I came into the charts and just took a trade without giving much consideration to, once again, the probabilities of the trading conditions, right? So this is the daily. You can see that we're looking at this candle right here. We swept the previous day high, right? We swept all these highs, and look at the shape of that candle. It's like clearly a bearish candle, right? And noting that we swept all the highs, it already makes it low probability because one of the draws on liquidity has already been taken. So, and once again, as you can see here, this is the 4 hour. We had a really bullish move up. We hit the highs already. And then this candle wicked above this candle range at this key level, closed inside. And so that says, right, it's probably quite low probability that we're going to keep going higher. We're probably going to see a retracement here, at least to 50% of this candle range. And honestly, like, we were so close to this draw on liquidity that I just thought, fuck it, like it's probably just going to go right there, which is fair. But you've got to obviously weigh the factors once again. What's the probability saying? Like, the probabilities are lower that we've just swept this high and now we're sweeping the high at the high. That typically means that we're going to come in for a retrace. So this is what I saw: price respecting this 1 hour fair value gap, sweeping Asia low, having that displacement with the fair value gap for entry, looking for the highs. But once again, looking at this right here, you can see that we're in deep premium of this range. So you never want to long from a premium unless you're on the right side of the curve. And in this case, like, it's not that obvious what's going on, right? I don't regret this trade at all. I think it was fine. I think that had I weighed up the probabilities more and my mindset was in the right place, maybe I would have just avoided this one. But sometimes when everything lines up, like everything looks great, right, on the lower time frames, but it's not necessarily the best on the high time frames, you can still get swayed to take the trade just because the entry looks great and everything you want to see on the lower time frames is there, except the higher time frames is uncertain. It's easy to fall into the trap of taking the trade just because you see lower time frame, like good price action on the lower time frame. Anyway, as you can see, that trade was a horrendous loser. Completely wrong about that one, which is fine. It is fine. It does suck, but you've got to find the lessons in each loss and you can't dwell on the fact that you lost. So here's another trade. These weren't all from this week. Some of them were from last week as well. So this was the winner that we took on Tuesday, right? So as you can see, we're in bullish institutional order flow, strong draws on liquidity higher. Price came down into the range, respected this bullish order block and swept the previous day low. So at this point, I wanted to see some sort of displacement from here, and then we would be making the right side of the curve. We got that. We swept the lows down here. We had clear displacement back into the range, leaving behind a super sexy entry right here. And then this played out beautifully for a 1 to 3.5. I had to hold it overnight, which was really long. But I did see when price came down below this low in Asia and rallied up higher, we had SMT, we were at an order block, and we swept a key low. I was really confident that we would see price continue higher here. So I was already at break even. Like I moved my stop to break even. Risk was off the table. And obviously that was a beautiful trade, 1 to 3.5. And the beauty of that is I took 5 losses in a row and I took 1 win and I'm back to break even. And that is the beauty of it, right? Because first of all, 1 loss could have been avoided. A second loss should have been a winner, right? So immediately in my mind, I'm like doing the maths. I'm like, right, if I can just make sure I don't take a stupid trade like that again, then that's plus 1%. And then if I perfect my stop loss placement, that's plus 2.3% right there. Because if that trade had won, so immediately I'm like, right, that's 3.3% right there. So right now I'm break even. But had I not made those mistakes or fixed those just little nuances in the strategy, right, those idiosyncrasies, I could be up 3.3% right now. And that's always how I look at it, right? I take a lesson from every trade. I find where I can improve so that I can increase the profit margin, right? It's about decreasing risk and increasing the profit margin. As I was saying, the beauty of it is that I've taken 2 wins on that account and about 7 losses, right? But I'm at break even. I can keep a level head because I've taken 6 losses on that account and 2 wins and I'm at break even. So all it requires is another win and I'll pass the account, right? I could even take a couple more losses, another win. You know what I mean? It's like if your risk to reward is a positive, then you can stress way less about losing because 1 win will make back 3 losses, for example. And if I can just minimize the losses I take and perfect the winning trades that I'm taking, then it's really just minor incremental improvements that will lead to that profitability. And I genuinely believe that I am now on the right side of the curve of the break-even matrix, right? You've got the left side where you're losing. And then all of a sudden you're losing less. And then you're not really losing at all now. You're break-even. You're kind of break-even like. And then slowly you get out of that break-even stage by perfecting little things. And I genuinely believe that I am now on that right side. I'm perfecting little things, being a little bit profitable, a bit more profitable here. And slowly as I iron everything out, you get to that side of the curve where you are profitable. Like I genuinely believe I'm out of that break-even stage now because I can discern between whether I'm making a mistake, whether it was a shit trade, whether it was a great trade. Before, it used to be that I thought every losing trade was my fault. But now I understand the markets to a point where I can be like, all right, the probability was actually low. And that was my fault for taking a trade when the probabilities were low because of the market conditions. And in that case, yes, it's my fault for taking a low probability trade. but at least I know that it was actually the market conditions and not necessarily just my strategy, which I used to think it was. I used to be like, oh, it's my strategy, it's my strategy. No, it's the conditions of the market. And so if I can just make sure I avoid taking those lower probability conditions, then I start taking more winners in the high probability. And then I also start minimizing my loss and my risk. And I'm also thinking of the idea of obviously cutting the risk and then also letting the winners ride. In a book that I read called The Best Loser Wins, that's something they stress about a lot, which is not something I ever thought about, but I like the idea of it. I haven't implemented it at all yet, but it's something that makes a lot of sense to me. And another thing is you just have to submit to time. Like, I'm so much more patient now. I'm not taking trades that just for the sake of taking them. Like, I'll wait 3-4 days for a great setup and then I'll take the trade. And if it loses, it loses. But I will do that waiting. In the meantime, all you're gonna do is take losses and blow your account. And to me, it's like that's not a problem. Like, you turn up every day for a few hours and you have the rest of the day to work on whatever else you want to do, right? And you only need to take, honestly, you only need to take like 4 trades a month, right? Say 2 lose, 2 win. That's like anywhere between like 2 to 5% profit a month, right? Obviously, you want more than 2%. Like, my goal is 5% a month consistently. And so the idea of taking a lot of trades is not one that I entertain. It's like, just take a few high quality trades a month, and that should be enough to make you a good amount of profit. It's not, you day trade for the freedom, not for being on the charts every day and trading every day. So I've had this account for about 5 weeks now. Yeah, I would say I've had it for about 5 weeks and we're at break even. It's not a problem. I'm just working on being super patient and just focusing on the process of improvement and not on the process of making money. If you focus on the improvement, then the money will come as a byproduct. One thing to note is that, and this is something I've been meaning to journal, I was thinking, my mind went to a place of, oh, I only need to make 5% and then I make some profit. And then all of a sudden I'll make like 2K in a month. And it's like, no, you have to completely detach yourself from the idea of money, because as soon as you actually think about that, that's when you start making decisions based on emotions rather than sticking to your plan, logical decisions, probabilities. And the funny thing is, for such a long time, I've just been doing the trading. I've never even considered the money. Like, I really haven't. I've just been trying to improve. And I looked at my phone and I thought, that's just $3,500. And my mind was like, yo, that's $3,500. Like, that could be real money. For whatever reason, for like years, I have never looked at that number and thought that's money. I just looked at it as blue. Right, we made 3.5% profit. Then for whatever reason, I looked at it and thought that's real. And I thought that's where most traders get caught, right? They start thinking about the real money and how much money they can make, and they forget about the process. And then, so that is something that I had to remind myself. I said to myself, I was like, no, Jake, you focus on the process, not on the money. Even now you're back at break even. You focus on the process, not on the money. Once you pass the account, the plan is to risk 0.5% and focus on the process, not the money. I'm going to do everything in my power to instill the habit of not thinking about the money and just thinking about turning up my best, taking high probability trades, allowing probabilities to play out in my favor, and continuing to just take trades and turn up at my best and remaining detached from the outcome of every trade, right? I feel like I'm at a level of emotional trading maturity where I can really make sure that I don't sway too far either side from equilibrium. When I lose, I don't really lose my shit. When I win, I always make sure to check myself and say, it's just a win. Like, the idea of maintaining an emotional equilibrium in trading is so true. It's like you have to stay as close to equilibrium as possible so you can continue to make great decisions and not allow your emotions to dictate what trades you're taking and how you feel. And I feel like that is a turning point for most traders, is you fundamentally realize that you need to just completely detach your emotions. And I think once you reach that level of emotional intelligence, per se, is in trading, right, that is when you'll start to see a lot of improvement. And the final thing that I want to note, because I think the video is getting too long now, is that successful trading will feel like you're not doing a lot most of the time. And I think that's really important, to embrace the fact that successful trading is not a hustle. It's not you busy taking trades every day. a lot of the time you'll be waiting, you'll be patient, and you'll feel like you're not doing anything, and you'll feel like you're doing the least amount of work when you're trading successfully, which is really counterintuitive, especially for someone like me who likes to be busy and doing stuff to feel productive. Successful trading will feel like you're not doing a lot most of the time. So when I feel like I'm not doing a lot, I just kind of embrace it, right? I just embrace it and I'm like, right, this is just how it is. I don't feel guilty. I don't force trades because I feel like I should be doing something. So that's a key takeaway from this video, guys. And I hope you enjoyed that one. That was a long video, a lot of information. Obviously, as always, if you're a real one, hit the subscribe button and join the Telegram as well. I'm going to be doing some live streams on Twitch as well because I really enjoyed doing one the other day. So I'm going to be doing like trade breakdowns and I'm going to be just chatting to you guys. So follow my Telegram so you can see when I'm going live on Twitch, and just join the Telegram because that's where all the real ones are at as well. I appreciate you guys very much for watching as always, and I'll see you in the next video. Peace.